Hey everyone, welcome back to my channel. Today I want to talk about two legendary investors, Warren Buffett and Michael Burry, and what they might be thinking about the current stock market. According to author Robert Kiyosaki, both Buffett and Burry seem to be anticipating a major market crash coming soon. Let's start with Buffett. His company Berkshire Hathaway has built up a massive $147 billion cash pile, with a lot of that money in short-term treasuries, meaning Buffett is parking his money in safe investments that he can easily liquidate when he sees investment opportunities. This suggests Buffett thinks stocks are too expensive right now. As a long-term value investor, Buffett is known for being patient and waiting for the right opportunity to buy quality companies at discounted prices. The fact that he's sitting on so much cash suggests he's waiting for that opportunity when stock prices fall dramatically. Michael Burry is another legendary investor, made famous by the book and movie The Big Short for his prescient bets against the housing bubble back in 2008. According to Kiyosaki, Burry is now shorting the overall stock market, meaning he's making bets that stock prices will fall across the board. Michael Burry is another legendary investor. He is a value investor who looks for temporarily mispriced companies. In early 2008, Burry realized the U.S. housing market was in a major bubble, with home prices inflated far beyond their true value. So he made financial bets that the housing market would crash. His bets paid off in a huge way when the bubble burst, making him billions from the market collapse. Now, according to author Robert Kiyosaki, Burry is using a similar strategy by shorting or betting against the overall stock market. Shorting the market means Burry is making investments that will pay off if the general stock market declines. So just like he saw the housing bubble before others did, Burry likely sees today's stock prices as inflated and headed for a downturn. By shorting, he's positioning himself to profit when prices fall. Now, neither Buffett nor Burry have explicitly said a crash is coming, but these moves suggest they see the market as overheated and overvalued, and they want to have cash ready to swoop in and find bargains if a correction hits. As individual investors, we can't predict exactly when crashes will happen, but the world's greatest investors seem to be getting cautious and defensive. So it may not be a bad idea for us regular investors to also start taking some profits off the table and build up our own cash reserves. That way, we're ready to take advantage if prices become more attractive again. Let me know what you think of Buffett and Burry's positioning right now, and if you're making any changes to your own portfolio. As always, invest safely out there.